Good afternoon, everyone. Thank you so much for joining me today. My name is Krista Wetmore, and you're watching the Money Mindset Show. Have you ever wondered, what should I do if I have extra money sitting in my bank account? Should I pay off my mortgage or should I invest in RSPs? That's a topic I'm going to tackle today and explain different things that I would consider before making a recommendation for you. So whether or not you have extra cash sitting in your bank account, or perhaps you're going to be receiving an inheritance, or even if you're going to be receiving an employment bonus, there's different things that you want to consider before I make that recommendation as far as what to do. So one of the factors that we look at is age, another is income, your mortgage rate, your investment rates of return, how much you've invested overall, and do you have a pension? So based on those factors, I'd make a recommendation for a client, and those recommendations are tailorized to your specific situation. So what may be good for me may not be necessarily a great strategy for someone different as well. So let's jump right into it. And the first thing I'm going to talk about is age. So the younger you are, so if you are young, I would recommend prioritizing an RSP contribution. And the purpose of that and the reason for that is if you are young, then you have time on your side. So if you're not going to be retiring for 20, 30, 40 years, then the money that you're investing today can grow on a tax-free basis, whether it's your interest income, capital gains, or dividends can grow throughout the years, and it really has a huge impact on the amount of money that you're going to be saving over that time frame. So the younger you are, again, I would definitely prioritize RSPs. If you are, let's touch on income. So if you are in a higher income tax bracket, I would also recommend looking at RSPs and prioritizing them only from the standpoint that you would receive a larger tax benefit on your income tax return if you are in a higher income tax bracket. The other thing I'd want to look at as well is investment rates of returns. So what are you receiving on your investments, on your return rate? So if it is quite high and it's higher than your mortgage rate, obviously then it would make more sense to invest in RSPs than it may to invest in mortgages. And as well, likewise, mortgage rate of return is something that we look at as well. So if your rate on your mortgage is much higher than your rate of return on your investments, then obviously you'd want to pay down that debt and versus putting more money into RSPs. Another thing I'd want to consider too for a lot of my clients is look at have they maxed out the RSP contribution throughout the years? Because if you haven't used your maximum income RSP contribution room, that can be carried forward year over year. So in those cases, sometimes it makes sense to make a larger lump sum payment contribution into your RSP. And in those cases, I would even recommend taking the contribution and applying it against the mortgage and paying it down. And therefore, you're basically covering both of those goals. For those clients who may have a pension or may have a spousal pension that would be coming in upon retirement, for those individuals, I would recommend making a priority of the mortgage and paying that down quicker. So there's a few different strategies, as I just mentioned, a few different factors you need to look at as far as recommending one strategy over another. So one of the things that I already touched on that I do like to do is, why do you only have to focus on one of those two strategies? Why not focus on both? So as far as the mortgage, it does make sense from a financial planning standpoint if you're young to pay down that mortgage a little quicker, because you do want to have some buildup of equity in that home. If you are young, chances are with a grown family, at some point you want to upgrade your home and buy a larger home. So if you have some equity built into the house, that definitely helps you at that time. So a couple different little strategies to pay down the mortgage quicker without necessarily having to make a lump sum payment on it, would be increasing your regular payments. That can easily done. Most banks would either have no penalty if you're increasing your weekly or biweekly or monthly payment amount by 10, 15, or 20%. So that works out quite well. As well as I would always recommend to clients to, if you're on a monthly payment for your mortgage, changing that to biweekly or weekly plan. You pay a little bit more, but at the end of the day, you can save yourself quite a bit of interest as well. And also most banks have an option on there to match a payment as well. So either increase your payment, match a payment, change your payment date, frequency to have it paid more, or options that most banks will offer for no penalty. And again, those are ways that you can accumulate, pay down your debt and a little bit quicker, save some money and interest, and have some equity in your home. So again, you can focus. I know this may not be a cut and dry answer, but there is a way for you to focus and have both options, ensuring that you're growing your retirement planning, but at the same time paying down your mortgage as well. Anyhow, if you have any other questions or topics you would like me to speak about, please feel free to reach out to me. I'd be more than happy to speak with you. And I just have a couple little visitors here today. I am actually in southern Alberta today, visiting my little niece and nephew. This is my little nephew, Austin, and he just wants to say hello, and we want to wish everyone a very happy week, and we'll talk to you next week. Bye-bye.